You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 24th day of May, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. This is our second live broadcast of the day. First live broadcast is from 9:30 a.m. to 11:30 a.m. Eastern. However, that live broadcast is reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, you can do so right now by going to mytradingiq.com. At the very top of the page, there's a button that says free trial. Click that and your journey begins. We'll get all your indicators set up and your platform and all the stuff that you need to fully take advantage of all the resources available to you during your trial. During the trial, you have access to everything that our lifetime members have access to, with the exception of the Thursday night members only workshop. Doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial, because no matter when you sign up, you will get 5 full consecutive trading days in the trial. So if you signed up today, you would get Friday and then all the way up through Thursday of next week. So now this afternoon broadcast, this is open to the public. It's everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast. Best way, you only have to do this once. Go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. Every trading day going forward, you'll get an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform, where you will have access to the question box so that you can ask questions and participate in the discussion. Now, there'll be days that you're out of the office, away from the desktop, or you're just busy and can't join live. Got you covered. Point your browser to youtube.com/CFRN. You can join the broadcast live that way on our YouTube channel. Or if you missed the broadcast, you can watch it later, because not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Been around since 2005, but on the YouTube channel, you can scroll back 6 weeks, 6 months, a year, 2 years, even more, and just pick a couple of days at random. You don't have to listen to the entire 2-hour broadcast, but be sure to fast forward to the part where I'm doing the recap of the alerts and where Michael is doing the recap of the live trading room. And if it's in the last, I don't know, 3 to 4 months, at the top of the hour, 1 hour into this broadcast, we go live on the TradingView platform and trade live for 30 minutes. So you may want to fast forward to that part and check that out. Okay? So, youtube.com/CFRN. So open with a word of prayer, as we do every day. And what we've been talking about for about a week now is exactly that, prayer. As believers, we all know what it is, we all know we're supposed to do it, and most of us feel like we don't do it enough or do it right. There's no wrong way to do it. Our scripture today, Matthew chapter 19, verse 26, from the Message translation. Jesus looked hard at them and said, "No chance at all if you think you can pull it off yourself. Every chance in the world if you trust God to do it." Again, that was Matthew 19:26. Chapter 19, verse 26. So today we're going to talk about getting dirty. Greg Groeschel, some of you will know who that is, said prayer is never a last line of defense. It is our first line of offense. The Bible tells us to pray for others. One thing our prayers do is encourage people. When we get a text message, a note, or a phone call from someone saying they prayed for us, that encourages us. In praying for others, we are on the front lines of their lives. We get to pray on their behalf. As we grow in our closeness with God, praying for others will become easier, more natural, even exciting. So as we go about our day, let's get our knees dirty and pray. And you don't have to be on your knees to pray, but we've covered that. Here are 3 groups to pray for. Our inner circle, number 1. That's the smallest circle of people in our lives that we are closest to, including ourselves. This group needs us in their lives. It consists of family members and our closest friends. Praying for this group will be easier because we know them better. The majority of our prayers will go towards people in this group because they are at the forefront of our minds. And I honestly believe, were it not for my praying mother and grandmother, when I went through my season, I probably wouldn't be standing here talking to you today. And yes, it's true, I stand as I talk to you. I started that probably 3-4 years ago. It was hard at first because it's like my brain wouldn't engage because I had been sitting and talking for so many years, but they say sitting is the new smoking. So anyway, give it a try. See if it works for you. It took me about 2 weeks, and then all of a sudden, when I sat down, my brain wouldn't kick into gear. Funny how we can be as humans. So, The first group was our inner circle. The second group is our middle circle. This middle circle will be larger than our inner circle. This group consists of good friends, acquaintances, and extended family members. We won't always know what to pray for the people in this group, but nonetheless, we pray for them anyway. A simple, God, please give your wisdom to John, or God, I pray she comes to know you, will suffice. Doesn't have to be fancy. Don't have to light any incense or candles or any of that stuff. And then number 3 is our outer circle. Got the inner circle, the middle circle, and now the outer circle. This group will be the largest group in our life. It consists of people we don't know or have a one-time interaction with. It could be the leader of our country, a celebrity, or a server at a restaurant. The prayers for these people might be far more general simply because we are not aware of what needs they have. Sometimes these prayers will not be specific, so more general prayers are appropriate. Here's some ideas to get started with. Make a daily list and pray through it. Sit quietly and allow God to bring people to mind. Put a reminder on your phone to prompt you to pray. In fact, one of the Bible apps I have, I think it's just called the King James Bible app. I'm not positive, but anyway, it plays a sound and reminds me to be mindful and to pray a few times a day. And it offers up a scripture to go along with it. So, I'm sure most Bible apps probably have something like that. Turn the music off while driving and pray instead. Maybe unless you're listening to K-Love or Air One and there's some good worship music going, and you can pray right along with that music. In fact, most of the most popular contemporary Christian songs are based on Scripture. If you look at the lyrics, if you've read the Bible at least once, I'll never forget the first time I was listening to K-Love. This was way back in, 1997. And I had just discovered K-Love. I didn't realize there was anything other than the hymns we sang as a kid growing up. But I heard about this contemporary Christian radio station, and I thought, well, I'll check it out. So I put my dial on K-Love here in Phoenix, and I was absolutely blown away. The enemy no longer had all the good music. There were great, great songs, some that brought me to tears. And embedded in those lyrics were scriptures straight from the Word of God. Pray in the moment when the need arises. Often we tell people will tell us something and we'll go, oh, brother, that's rough. I'm going to pray for you. And sometimes we do and sometimes we don't. Depending upon who the person is, you can just lay your hand on their shoulder for a few seconds and offer up live in real time a 1 or 2 sentence prayer. That can be really encouraging for someone who's going through some kind of trial. You don't want to do that with strangers, especially not in the society we live in today. You probably end up getting arrested. To impact others, we must halt our own agendas. Our prayers don't have to be long, and we don't have to worry about the outcome. We did our part. we can stand on the truth that every prayer we ever pray will be heard by a loving, good God. Our prayers can be both spontaneous and planned. And God says we can come to Him for anything and everything. He actually means it. So join me in a word of prayer. Heavenly Father, today we approach your throne of grace with hearts full of faith and trust, inspired by the words spoken by Jesus in Matthew 19:26. Lord, you declare that with you all things are possible. In the face of challenges and impossibilities that surround us, we find hope and reassurance in your unlimited power and unwavering faithfulness. We bring before you the mountains we face, the obstacles that seem insurmountable, and the dreams that appear out of reach. We surrender our intentions, our limitations, and weaknesses to you, knowing that you are the God of limitless possibilities. We ask that you would strengthen our faith, that we may believe wholeheartedly in your ability to do what seems impossible in our lives and circumstances. As we encounter struggles, uncertainties, and moments of doubt, remind us of your presence and remind us that you are the God who brings beauty from ashes, who turns mourning into joy, and who makes a way where there seems to be no way. Help us to trust in your perfect timing and to patiently wait for your purposes to unfold. We ask, God, that you increase our faith, that we may step out in obedience, knowing that you will provide and guide us every step of the way. Lord, we bring before you our hopes, our dreams, our desires, and even our dramas. Align our hearts with your will, that we may seek your kingdom above all else. Grant us wisdom and discernment as we make decisions and pursue the paths you have set before us. We pray for those who are facing seemingly impossible situations. May your power be made manifest in their lives, bringing healing, restoration, and breakthrough. Strengthen their faith and remind them that you are the God who can do the impossible. Thank you, Lord, for your faithfulness, even when we cannot see the way forward. Help us to cling to your promises, knowing that you are able to do far more abundantly than all we can ask or imagine. It's in Jesus' name we believe and pray. And everybody said, Amen. Happy Wednesday. I hope it's a happy Wednesday for you, whoever you are and wherever you are. Now, those of you that are tuned in live via the YouTube channel, you already know the title of today's episode. In fact, it's something that I talked about briefly this morning in the live training room. And it's probably something you've heard me say many times on this broadcast if you've been around for a while. The statement I made was that historically, financial markets rally into a U.S. holiday weekend. Now, based on my own personal experience, that really does seem to be a truth. But I thought, Let me dig a little deeper and let me see if it is fact or fiction. U.S. holiday weekends are eagerly anticipated by many, offering an extended break from work and an opportunity to relax and celebrate. In the world of financial markets, traders often wonder if there is a consistent trend for markets to rally heading into these holiday periods. So we're going to actually explore if this is fact or fiction. It's important to note that the behavior of financial markets is influenced by a myriad of factors: economic data, geopolitical events, investor sentiment, and market participants' trading strategies. And then you can throw in on top of that Janet Yellen speaking, or on top of that the Fed minutes, which are coming out this afternoon. While some patterns and tendencies may emerge, it is challenging to draw definitive conclusions based solely on historical trends. Now, the common belief is that markets often exhibit a bullish bias leading up to U.S. holiday weekends. Rationale behind this notion is that traders may be inclined to hold long positions, anticipating positive market sentiment and potential gains during the holiday period. Or perhaps we could call that a self-fulfilling prophecy. Now, this one's important. The reduced trading volume typically observed during holiday periods can create an environment where relatively small buy orders have a greater impact on prices, potentially leading to upward price movement. However, it is essential to approach such an assumption with caution. The notion of markets rallying into U.S. holiday weekends is more of an anecdotal observation rather than a consistently reliable pattern. While some instances of pre-holiday rallies may be observed in historical data, there are numerous examples where markets have experienced mixed or even bearish performance heading into a holiday weekend. Behavior of markets before holiday weekends. Turn this thing off. The behavior of markets. Does it turn off? Yeah, there we go. The behavior of markets before holiday weekends can vary depending on a range of factors, including the overall market sentiment. You know, we have this debt ceiling thing hanging over our head right now. News events and economic reports released ahead of the holiday. We have some major news coming out tomorrow morning and Friday morning. Major economic reports, high impact economic reports. If there is significant positive news or favorable economic data release just before a holiday weekend, it may provide a catalyst for a rally. Conversely, negative news or data can dampen market sentiment and potentially lead to a decline in prices. It is crucial to consider the influence of institutional investors and professional traders. These are the deep pockets that you always hear me talking about, the ones that move price. These market participants often have sophisticated trading strategies and may strategically adjust their positions ahead of holiday periods to minimize exposure to potential market volatility. Their actions can impact market dynamics and may contribute to a more muted or range-bound trading environment. It's also worth noting that each holiday weekend can have its own unique characteristics. Some holidays, such as Thanksgiving or Independence Day, are known for their festive atmosphere and extended breaks, while others, like Martin Luther King Jr. Day or President's Day, may not have the same level of market impact. The significance and market behavior around specific holidays can differ, making it challenging to generalize trends across all U.S. holiday weekends. So while there may be instances where markets exhibit a rally before a U.S. holiday weekend, it is not a consistently reliable pattern. The behavior of financial markets is complex and influenced by numerous factors, making it challenging to draw definitive conclusions based solely on the historical trend. Traders should approach holiday weekends with a comprehensive understanding of current market conditions, news events, and economic reports to make informed trading decisions, rather than simply relying solely on the assumption of the fact that here's a holiday, the market has to rally. It doesn't. However, the fact that we hit the lowest weekly trading zone this morning on the ES, the lowest zone for the week, once the zones are published Monday morning at 6:15 a.m. Eastern, they don't change all week. Today's Wednesday, and we hit to the tick the lowest weekly trading zone. And we may have bounced off of it, we may have traded through it. We'll see when we go to the charts here in a few minutes. But in my mind, that sets the stage for a potential rally into the holiday weekend. Because even when there is no holiday weekend, if during the week, especially if it happens by Tuesday morning, we hit the highest weekly trading zone in any particular market or the lowest weekly trading zone in any market, there's a high probability that there will be a reversal, and we might just end at the other in the week at the other end of the spectrum. We'll see what happens this go around. Now, I was going to give you the numbers from around the world. Let me do that. Start here in the US with the cash markets, or the indices as they're called. Currently, the Dow down 291 points. The NASDAQ down 133. Now for the Dow, that's a drop of almost 1%. For the NQ, down 132 points. That's a little over 1%. S&P 500 down 39 points, almost 1%. And the Russell 2000 down 21 points, just over 1%. And there are Fed minutes being released this afternoon at 2 p.m. Eastern. That can create some intense volatility. Didn't used to, but now it seems like it almost creates as much volatility as the actual Fed announcement itself, because of the whole interest rate situation. So just be prepared at 2 p.m. Eastern today to possibly be flat. Let the minutes come out. Let the market absorb the numbers. And then as the market assumes its regular rhythm and flow, then step in. Just a thought. In the commodity basket, crude oil up $1.36, trading 74.27 last. That's a gain of almost 2%. Gold down $13, trading 19.61 last. Silver down 44 cents, trading 23.18 last. That's a drop of almost 2%. Now, when silver moves $1 in price, that's worth $5,000 per contract traded. and being down 44 cents, well, at the 50-cent mark, that would be $2,500 per contract traded. So silver down a couple days in a row here, back to back. In the Asian markets at the close, Nikkei down 275 points, 1%. Shanghai down 41, 1.25%. The Hang Seng down 315, over 1.5%. And in the European markets, at the close, FTSE down 135, that's 1.75%. The DAX fell 310 points, just shy of 2%. And the CAC fell 125 points, 1.75%. So that gave us a red day in Asia. It was a red day for the UK. And so far, it's a big red Radio Wednesday here in the US of A. So with that, let's jump to our recap of the Logic 247 alerts. Logic 247 is our 24/7 around-the-clock E-mini alert service. The alert channel opens for business Sunday night at 6 p.m. Eastern and remains open Friday afternoon at 5 p.m. Eastern. Alerts can come out at 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. So our day session is their night session and vice versa. We're in week 251 of Logic 247. Over those 251 weeks, we've issued over 14,100 individual handcrafted alerts. Since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued a total of 30 alerts. Now, this was as of 7 a.m. this morning when Valerie did the recap. She'll update the recap this afternoon and again this evening. So these numbers will change because I issued additional alerts this morning and may issue more this afternoon. But as of 7 a.m., 30 alerts issued, 7 never triggered. That gave us 23 actionable alerts, of which 2 or 9% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure, and a very simple 3-step process that we teach all of our passport holders. There's one caveat. Never risk more on a trade than the potential profit in the trade. Now, the alerts have an entry price, an initial target, and quite often a second target, a third target, and then a final trade to target. So with simple math, you can determine what the potential profit is in the alert. But what you have to ask yourself is, am I going to hang in for the final target? Or am I going to get out at the initial target or the second target? Whatever decision you make, you should not risk more than you hope to gain or profit from the trade. And no matter how much potential profit is available per the alert, never risk more than $300 per contract trade, less when possible, based upon either the alert itself or when you plan to exit the trade. Over the last 251 weeks, we've averaged 20% or less of the alerts being stopped out based on the risk profile I just gave you. Now, we still have our original alert service, the concierge trade alerts, and they're a little bit different. They don't come out around the clock, and they're based on historic price action. Normally I get them out right after the Globex open. I did real good Monday, 6:05 p.m. Sunday night, 6:10 p.m. Last night I was dragging my heels for some reason, and they came out at 7:25. Market opens at 6. This report was published for our members and trial members at 7:25 p.m. Now, because this broadcast is open to the public, if you're not a member or a trial member, you didn't get these targets. So, real quick, grab a screenshot if you like, because we're going to walk through each individual market. Now, when the report comes out, go to the 30-minute chart of whatever markets you trade. We'll use the ES as an example, and make note on your 30-minute chart where price is at the time the report comes out. It will always be between these two numbers. Once you make that note, guys, I'm going to have to put you on hold for 1 second. Well, that was awkward, but I'm sorry I had to take that call. There's a couple numbers. You probably have them on your phone. There's a couple people that when they call, you must pick up. So anyway, it wasn't great news. It wasn't bad news. It was just news I needed to know. So anyway, let's move on. Now, draw a line in the sand at the long target, a line in the sand at the short target. When we go to my charts, you'll see what those lines in the sand look like. If price gets above the 30-minute BVC, it's attempting to reach the long target. If price gets below the 30-minute BVC, it's attempting to reach the short target. It's really that simple. You still need to look left to spot potential obstacles, previous swing highs or swing lows, which can become current support or resistance. And over time, you'll learn how price behaves around a weekly trading zone. Know this, from the moment the markets open Sunday night till they close Friday afternoon, price is always trying to reach a weekly trading zone. If price is above the 30-minute BBC, it's trying to get to the zone overhead. If price is below the 30-minute BBC, it's trying to get to the zone below. Now, the toughest part is that you have to resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So, Michael should be here in a few minutes. He'll give us a recap of the live training room, and then we'll trade live for 30 minutes on the TradingView platform. And then I'll finish up this recap once we're done trading live on TradingView. So we got about 3 minutes before he shows up. We always start with the daily chart. Why? Because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why is that? Has to do with account size. Okay? Their accounts are denominated in hundreds of millions and billions of dollars. Typical retail trader has an account denominated in thousands or tens of thousands of dollars. Now, the fibs that you see on my screen, 13th century math. I said 14th century for years, but the other day we talked about it. And anyway, and fibs are not proprietary. So trust me, every institutional trader who has access to tremendous sums of money, they have these exact same fibs on their chart. Again, fibs are not proprietary. They're common knowledge. And it tells you where to look for when you draw from the low, October 13th, to the most recent high, February 2nd. It shows you the areas where you should expect potential support. As you can see, coming down off of that February 2nd high, we caught a bounce at the 38% fib. Then we caught a bounce at the 50% fib. And that took us back above the 24. And most recently, we've come to the 24% fib retracement and bounced. We came back to the 24% fib and bounced. But now what we have is we have a high and we have a lower high. Okay. Yesterday I talked about if price trades below the daily BBC, these candle bottoms right here are potential support. So we're right at that area. Okay. Now, as I mentioned, we already hit the lowest weekly trading zone this morning on the ES, 4118/4119. Here's the 24% fib. If we continue much lower, then it becomes a high probability that we're going to drop to that 24% fib retracement. So no matter what market you trade, whether it's the S&P or crude or gold, Amazon, Walmart, Bitcoin, or the British pound, spend 2 minutes looking at your daily chart before you start looking for trading opportunities on your smaller time frame. In doing so, you'll know which way the wind is blowing. So when I opened up my charts this morning, I knew I was looking for a short trade. Okay. The market opened last night right here, and it painted a little bit of green until price dropped back to the entry, and that left a wick in its wake. Wick, 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 wick. Okay. And now we got a big red candle. We're off the low of the session. Okay. But if this doesn't paint a bearish picture for you, just at first glance, book a mentoring session. Okay. Let me help you learn how to read your chart. Also, by looking at your daily chart, you can make note of where major potential resistance is. In this case, it would be at the high of today, and support would be at the low of today, the low of May 12th, and then the low of May 10th, and then that would put us back at the 24% fib. All right, on the 30-minute chart, all alerts are created on the 30-minute chart. It's my roadmap. It tells me when it's time to break out my smaller time frame and actually put on and take off trades. It also helps me spot windows of opportunity. Like I put out an alert this morning to short this area here in the Logic 247 channel, and we dropped to the lowest weekly trading zone to the tick, 4118/4119. Spiked it a little bit. Only 3 things happen at a weekly zone. The most common, 70% of the time, is this: consolidation. When price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance. Now, here's where the market opened last night. Now, these are 30-minute candles, so it would have been in the life of this candle. Time was it? 7:25. Yeah, it would have been in the life of this candle that I published the CTA report. And immediately we know we have an issue on our hands. What is the issue? Well, overhead is the BBC. When price pulls up to the BBC, we expect resistance. So I've got resistance overhead, blue and climb. You see red and falling, turn to blue and climbing. That represents support. So in this area here, I do nothing. Once blue and climbing turns to red and falling, and already price is below the BBC, then I would be prepared to sell the open of this candle at 41.60 1/4. And from 41.60 1/4, we dropped to 41.42. It's about 18 points. We then bounced back up to the BBC, but we couldn't quite get all the way there. Just wasn't enough buying pressure. And then where do we go? Right to the target. We bounce and hit the target again. We bounce, we hit the target again. Then we trade through the target to this week's lowest weekly zone at 4118/19, where we're currently consolidating. We will go through each and every one of these markets after Michael gives us a recap of the live training room, and we spend 30 minutes trading on the TradingView platform. So when we finish on TradingView, don't go away, stick around, we'll complete the recap. Michael?
Yes.
It's all yours.
All right, here we go.
Looks good.
Excellent. Let me just scroll down all the way down to here and click on this. There we go. All right. Good afternoon, everyone. Today is Wednesday, the 24th day of May, 2023. If you have not taken a free trial with us and you want to, then go here to mytradingiq.com. Right here, click on this button. Once you do that, you'll have all the information you need. Well, first you gotta fill out the form. It's a little form. Just fill out that form, and you'll have all the information you need to take the free trial in the morning. You'll have all the information to access the room to get into the free trial. Right? If you're going to do that, you should go here and download the trading platform if you have to download one, or sign up for the trading platform if you're going to sign up for TradingView, and give us all the information we need to get your desktop set up, because having the trial and having the charts in front of you is the best way to do this. Now, in the spreadsheet today, we had a pretty good day today. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 24th day of May, 2023. We made 75 ticks in the NQ, 17 in the Russell, 5 in gold, and we lost 2 on the ES. That put us at 45 in the morning session. Today took 6 minutes and 2 trades to get to the goal for the day. At that point, we're up $500, and we took a total of 18 trades this morning. So on the month now, we're at 6,210. That's over 17 days, averaging $365 per contract per 2-hour trading day. If you were to quit trading when you get your goal for the day, that'd be down here. We've gotten our goal in 96 out of 99 days so far. If you were to quit trading when you get your goal for the day, that's right here. And you added 1 contract per month. Wow, I just short-circuited there. Did you see that? I skipped over the normal thing where I go from here to here, and I jumped right over to here. That's weird. Anyway, so far this year, you would have only had to work 29.61 hours, and on the year, you would have been averaging $1,417 per hour. Right? If you quit trading when you get your goal for the day, and the goal is $100 profit per contract, and you added 1 contract per month, meaning you'd be at 5 contracts so far this month. And like this morning and yesterday, it didn't take much to get the goal for the day. Pretty much every day this month, well, almost every day, all but one day, we got the goal. And we had some pretty good days getting the goal this month. Not like that one day last month where we hit the goal. We had $22,000 or something like that. Was that last month? That was this one right here. This one? Maybe it was a month before. There was one day I thought where we hit the goal and we had a huge number, about $1,180, $1,370. When you get the goal, those are big numbers. But anyway, this morning was $500 because we had 8 ticks in profit on the ES. Both of these days in a row, we had 8 ticks in profit on the ES when we got the goal. We had 1 stop out today on the ES to go with that, which I'm going to get into right now. It's 12:52, so I really got to get into this. Let me just shut off all these other things. I don't have to answer a whole bunch of questions. All these little teal arrows. Oops, I shut off the wrong one. Here. Back here now. On the gold today. There was pretty good movement in pretty much all the market today. I believe we had trades and everything on the gold. This was our first trade in here, and we ended up taking just 5 ticks profit on it. That was our only trade in gold. We took 5 ticks profit on that. Then going through here, we didn't do anything else. Gold got kind of flat all through here. All right, then I had a nice move down right here, but this was during the break. Ended up missing that, and I didn't do anything through here during the break. Okay, there were some nice trades in there though. There was a nice one right there. This one here would have stopped you out to the tick, I think, if you'd have taken this. However, you would have gotten a break even down here, and I wouldn't have taken this because it didn't put in a lower swing. So there wasn't really all that much other than this trade right here during the break. Okay, but again, you're not trying to trade 100 times a day. You're trying to get your goal and then stop trading. Okay, on the Russell, let's go back here, all the way back here. Here we are. All right, on our Russell, on our first trade here, we ended up with a break even. Then right here was our next trade, and we ended up picking up 12 ticks on that one, and then 5 ticks on that to get us to 17 on the Russell. And then we had another break even trade over here. Looks like there were a few trades in here I didn't do for whatever reason. I don't know if they'd have all been stop outs or if they would have gone enough to get the stop to break even. But if you waited for the one to pull back in and hit the ribbon, it was right up here. And that worked out well. And same thing with that one. And this one here, it didn't put in a lower swing, so you wouldn't have done that. All right. You could have done that one, which would have been a nice trade. This one would have stopped out. Then it got all flat. We didn't do anything through there. And I was doing training all through here. So there were some nice trades through here that happened that I didn't get into. Then finally I started trading again in here after 11 o'clock. We had the one break even there, and that was it. We were looking for this to give us a lower swing. That's what we were waiting for on this. And we just had that one break even. We didn't get a lower swing, so we didn't do anything else in that direction. We got over here, just went flat, more flat in there. And then this is all during the break. There were a few nice trades right here during the break, or a couple nice trades here during the break. Now this one did not hit the ribbon, so you couldn't have taken that one. You had to wait for the arrow on that and the arrow on that. Right? You could have taken this as well, would have given you some profit, but didn't continue the trend. And that was it for the Russell. Now the ES. Let's go back to the beginning. Well, there's not really all that much to see on the ES. So you can see it all right here in one screenshot. Our first trade on the ES was right here. That's where we got the goal for the day. We picked up 8 ticks on that. Next one was a break even, followed by another break even, followed by a stop out. So on this stop out right here, and why I have that arrow there, but on this stop out right here, we ended up with -2. And I don't think I mean to have this arrow right here. And let's see, we then went into the break. It was a trade here during the break. Now this would have been a ribbon trade from right here, not an arrow trade from right there. The ribbon trade would have given you some profit or a break even. Then it changed directions, and again, actually this wouldn't have been a ribbon trade. This would have been the arrow trade right here. And that, the way it worked, it had a bunch of slippage from here to here, where it gave the slippage was actually from here all the way down to here, and then it gave the arrow on the down close of this bar, which was right here. So that's probably not something you would want to get into, no matter how it happened. It was just messy the way it all happened. Looking at it here on the chart, and imagine when it actually did happen. There was slippage from this level here all the way down to this level down here. So that is what, 22.75 down to 20. So that's just about, that's 11 ticks of slip right there. There's 11 tick gap. It's not really slip. There's 11 tick gap in there. So there's really no trade in there. And this one right here, if you took it, it would have stopped you out. So the ES got kind of tough trading there during the break. And the NQ, now we had some pretty good trades with the NQ today. We had a couple of 30 tick wins, which were nice. We did have a stop out in there as well. And we're using the NQ as our example today when we're doing the training. I'm going to bring the question box up and see what's on here. Okay. So our first trade here on the NQ, we had a break even, is that right? Yeah, we had a break even on the first trade on the NQ. Then we stopped out on the second trade on that one. I think I was too late getting into it. I should have not taken that trade. I think that was a mistake. The ES trade that I took, I think, was also a mistake. But anyway, we stopped out on that one, -20 ticks. And then the next trade, we got 16 of those ticks back. So we ended up at -4 after this trade. Then we got a +30 on that one. That put us at 26. Then we had another +30 on the one right after it. That put us at 56. And then we got into some chop right here. So we went from 56 to 64 in here. And then we took another one right here after getting a little bit lower swing. We took another one right here, it looks like. We went from 64 to 72. And then we didn't do anything for a little while. We got into the training. That's what it is. And I was using this space right in here, the leg lengths and stuff like that during the training. We didn't do anything over here. Then finally we started trading again over here. This is the one. I got this on a pullback. I got in at 72. Is where I got in on. I think it was this one. Maybe it wasn't that one. Maybe it was a different. There was one of them that looked kind of questionable because I got in on the pullback and then it went down, but didn't go down enough from the entry point to bring the stop to break even. But anyway, it might not have been that one. It might have been a different one. But I ended up getting from 72 to 73. So I got 1 tick profit, then I got 2 ticks profit. Then I don't have whatever I got on this one. It looks like that was probably another 1 tick profit. And the reason I'm getting 1 tick profit or 2 ticks profit is because the stop automatically gets bumped. With the DOM for the NQ, I use this automated thing. And if you look in here, the way it's configured, the 16 range, after we get 8 ticks in profit, it bumps the stop from -20. It bumps it 21 ticks to put it at +1. And sometimes there's positive or negative slippage on that, the way it moves. So sometimes it'll end up putting me at break even minus a tick, break even plus a tick, break even plus 2 ticks. But it's programmed to put it break even plus a tick. Depends how much slippage I get. But that was our morning with the NQ. Okay, so then into the break, there was this right here, which is a long way away from the ribbon, which would have stopped you out. And this also would have stopped you out. That was right at the ribbon. So we weren't going to have any luck right there. this worked out to be a decent trade, but you would have probably taken some profit on this original move down. I wouldn't have done anything through here. All through here, I wouldn't have done anything. Right down here, there was nice profit. Then there was trouble right here. And you wouldn't have done anything else in that direction. Yeah, it looks like it was just tough trading today. Oh wow, I didn't realize it's 101. I got to get into the other session, guys. If you have not taken a free trial with us, then all you need to do is go here. If you want to take a free trial, go here to mytradingiq.com, sign up for the trial right here. Okay, I didn't realize it was 101. I'm going to jump into this other stream. Okay, let me start a stream and let me fix this so everybody can see it. All right. So yeah, to take a free trial, just go here to mytradingiq.com, click on this button. When you do that, go to the trading platforms, and right here is how you get signed up for TradingView. Watch this little video. It's just a few minutes long. Watch the video and you get signed up for TradingView right there. Okay. So now we're getting into the live trading again. And what I was just showing everyone was that so far today, I'm going to move this over so that in the live stream, everybody can see all the charts. There it is. So this morning, in the session this morning from 9:30 to 11:30, we ended up with plus 17 on the Russell, plus 75 on the NQ, minus 2 on the ES, and plus 5 on gold. For anybody that's in the live stream right now, if you have any questions, just step into the live stream. I think I was just finishing going through all this, and I wanted to look at the larger time frame stuff for just a minute and see where things stand with larger time frame as far as the day's been going so far. Let me put this right here so everybody can see that, the whole thing. Now on the Russell, I don't know why it does this to me, but let's try it on 5, 10 minute. Here we go. Now we'll try it back on the 30 minute. Okay, so if you look at the Russell right here, we had a huge move down here on the Russell. Do this, okay. This is the weekly trading zone up here, and the Russell had a huge move down off the weekly trading zone, and it's got this space right now between itself and the ribbon. The next zone down is right here. That's probably where it's trying to get down to right now, 72. If you look at the other markets on a larger time frame, the ES is at a weekly trading zone, so it's probably going to hover here for a little while. We may not get many trades at all. We like it when it moves away from the zone or when it's moving into the zone, but not when it's moving at the zone. Okay, this consolidation stuff is just gonna, I don't know how much time that's gonna take to get away from it. You can see the gold, these are all 30-minute charts, by the way. The gold also dropped through its weekly trading zone. It's probably gonna pull back up to it. The midpoint between these two zones, which turns out to be a significant area most of the time, is right here at 54. So if it's gonna continue to move down, it'll probably get down here. It might pull back up, test the zone again, and then push down. You can see the ribbon is all the way up here. And the NQ, let me just bump that to a 31 minute. Okay, this is what the NQ looks like right now. And it's right in the middle of the ribbon and the weekly trading zone down below it. So none of these marks are really looking there. They're going to give us any indication of what's going to happen next. You know, they're all like right in the middle, and they could go either way. So we're just going to have to trade what's in front of us. We'll have to wait and see what it gives us. Right now we have long-term direction is flat right there. We're not going to have anything there. Long-term direction is flat there. We're not going to have anything there. And the long-term direction is flat here. So we're not going to have anything there. All right. So now we wait. Okay. If anybody who was in here who was on the live stream wants to see anything other than futures, you just have to ask. Okay. You just have to ask. We're going to be doing this live stream until 1:30. It is now 1:05. So if you have any questions, just type them in. If you want to see anything other than what we have showing, just type that in as well. All right, right now the markets are all sideways, so we don't want to do anything just yet. The Russell is the closest thing to giving us a trade. But as I just said, look at the Russell on the 30 minute. And it's weekly trading zone. So the Russell is trying to get down here to 62. All right, it's trying to get down to 62. if we look at the midpoint between the two weekly trading zones, do that right here. Okay, the midpoint between the two weekly trading zones is right here. So you can see how it's kind of hugging that midpoint right now. Oops. Kind of hugging the midpoint right through here. And as it breaks away from that, it should go down here to the weekly trading zone down below. Right, it's 62. Now on the chart, that's only right down here. Okay, so if it pulls back, that'd be a nice target number for a trade. If it pulls back, and just starting to. So we could get something there. These other indices aren't giving us anything though. Okay, we're not getting anything on the other indices, so we just have to wait a few minutes. And hope that something comes up, something that we can use. So I don't have any questions in here, but understanding. Okay, I'm just reading everything I was in here. I mean, there's a lot of people that came in here to watch this right here, guys. The reason it's given short right here is because it dropped out of the overbought. Now we can take that trade right there. Matter of fact, oh, it's too late. I was gonna say sorry. I looked away for a second and I missed that. This down close right here. The reason it gave you the arrow, we didn't hit the ribbon, but we came out of the overbought right there. So this is the first attempt to move down to here. Now with the Russell's leading the pack here of the indices, I'm hoping it's going to give us some kind of follow through with the other ones. You see they're totally flat. The long-term direction is flat on both of them. So we can't really do anything with that right now. And let's see. Okay, well, it's moving down nicely. So I want to go look at one other thing with that. Here, just a second. With the DOM. Now, I didn't get into the trade. There's only so much information you can get out of the Russell DOM. But if we look down right now, the low of the day is right down here. It's probably going to try to get down to that. And the information that the DOM is giving is saying that 65.6 is a number that it wants to get down to. Okay. So it's starting to pull back a little bit right here. 65.6 is a number that it wants to get down to within the DOM. That's just right here. So it's already gotten there once. The low of the day is down at 65.5. This is the low of the day right here. I think it's trying to move down some more from here. These other markets are starting to move just a little bit. Okay, you see over here on the NQ, it's starting to move just a little bit. It's still not exactly there. Okay, we need to get down quite a bit lower to separate this long-term trend up here. Okay, quite a bit low to that long-term trend. Okay. And we did get a little bit of a pullback here on the Russell. Now, it didn't pull back far enough to get the black line up into the overbought. Okay, it didn't pull back far enough to get the black line up into the overbought. So we are, we're not gonna have a trade there. I don't know, guys. It's pretty dry right here. I don't know what we're gonna end up with as far as trades go. If you guys have anything else you want to go look at, just let me know. The gold is starting to move up a little bit. Long-term trend is starting to spread out a little bit. But if there's no trades, there's no trades. And so I'm not going to force any kind of a trade here.
And in about 45 minutes, we have the Fed minutes. And so the markets sometimes will get real quiet and consolidate ahead of a major economic.
Yes, I totally forgot about the Fed minutes coming out at 2 o'clock. You're right, Dwayne. That's for everybody that's in the live stream right now. You didn't hear that. At 2 o'clock, we have the Fed minutes coming out. That's probably why the markets are so quiet right here, right now. If you go here to this, you'll see right here, FOMC meeting minutes, 2 p.m. That's probably why the markets are like they are right now. Okay. Now, we didn't get a pullback deep enough to jump into the Russell again. If you got it on the first move down right here, you're still in it if you want it to be. The gold is starting to move up, though. We might get something here on the gold. Okay, we may get something here on the gold. We'll look for the pullback on that and see what happens with it. Okay.
While we're waiting, can you post the link for the trial?
Yeah, sure, I can do that. For anybody who hasn't taken the free trial, if you want to take the free trial, then all you have to do is go here, sign up for the free trial right there. Okay. It's really slow in here, but sometimes no trade is the best trade. And we had a bunch of trades this morning. We had 18 that we took in the first 2 hours, and there were probably another 18 that we missed in the first 2 hours. So there's plenty of opportunity normally. Just got to wait for it. And right now, this half an hour period is just 30 minutes. And we missed this one trade, one nice trade that it gave here in that period so far. We could get something here on gold, though. You see how we're overbought right now. As it pulls back, you want to see if it gets into the oversold. Okay, as it pulls back. So that's what we're waiting for now. Okay. And the other indices are starting to move just a little bit. Yeah, I wanted to say that too. If you guys are watching this on the live stream on TradingView and you do not follow us yet, just click the follow button and you'll be notified when we do these live streams. Okay, you'll be notified. And we try to do them every day at 1 o'clock. And we will be doing them every day at 1 o'clock this week, except Friday. We will not be doing one on Friday. But we'll be back on Tuesday.
We're closed Monday, right?
That is correct. We are down Monday.
Are we doing a live training room Friday morning?
Yeah.
We are.
Yep.
Okay.
It's regular market hours on Friday. I just have those 2 graduations on Friday afternoon. So
I got you.
As soon as I'm done with the room in the morning.
Okay. So you won't be here for the afternoon broadcast at all on Friday?
No.
Okay, but I'll still be here, guys, and I'll still do what I normally do. We just won't do the part Michael normally does.
Yeah. I'll give you all the information. I'll have it all written down if you want to.
Okay.
You can just wait.
Yeah, if you want to just jot down how you ended up, I'll share that.
Okay. Yeah, that's something. It's in the spreadsheet. It's right here in the spreadsheet every day. I try to keep as good a track of that as I can. All right, so the Russell is pulling back. Remember, this is where the weekly trading zone is, right down here. And that's what it's trying to get down to. So it's pulling back right now. We want to see the black line get up into the overbought right here. That would be great. See the NQ starting to drop a little bit with it right here. Okay, the NQ is starting to drop a little bit with it. We want to see that pull back up into the overbought as well to give us a short opportunity. We're not quite there on the Russell. We need an up close on this bar, I think. If we get an up close on this bar, that'll bump this up quite a bit. And I'd really like to see it get all the way up into the ribbon, which is this dark red right here. Dark red line right there. I may just put the other lines in the ribbon because it's a little easier to differentiate if I have them all in there. I took them out because the only ones you really need to see are the top one and the bottom one. But when you show it like that, there it is. Okay, we did get the up close that we were looking for. We are now in the overbought here. Okay, so what we're looking for now is either a hit of the ribbon or just a down close out of the overbought. Pull it out of the overbought, that would give us an arrow. And I would anticipate that this is going to make it down to 1762. That is, weekly trading zones are part of the package when you sign up with us and when you sign up for the free trial. You get the weekly trading zones, and what those are support and resistance levels. Support and resistance levels for all the different markets. These are the zones right here on the Russell. Okay, and if I back this way out, hit that, back it out, you can see how these zones were important every time price got to them, and they're trying to get to them again right now. Okay, now this is not a trade right here by itself because we didn't hit the ribbon and we didn't come out of the overbought. So it's not a trade right here. I know that's a little arrow. It's a little red arrow. That arrow is not a trade arrow. Right? The black arrows are trade arrows. If it hit the ribbon, then you don't need the arrow. Right? It hit the ribbon and this black line here stays in the red. Long-term direction is bearish, then you don't need an arrow at all. That's about what's going to happen over here, I think, on the NQ right now. See, both the NQ and the Russell right now are very close to giving us trades. Okay, over here right now on the NQ, we've got a high of 89.75, so -4 from that 89.75. Be selling 85.50 on the NQ right now. I'm selling 85.50 because it doesn't matter if this comes out of the overbought. The black line is in the red right here. We've hit the ribbon, the black line is in the red. Now did that go up a little bit? It did go up a little bit. Okay, it went up a little bit more. So what it is 4 points plus a tick from the top of the bar. That's what I'm selling over here. Now on the Russell, it's going to be 8 ticks from the top of the bar. Okay. On the NQ, it's 17 ticks from the top of the bar. So let me get the Russell going too. All right, it's 8 ticks from the top of the bar on do both of them so I don't lose my dimes. All right, we're having a little bit deeper of a pullback, 92.75. It's going to be right there. I think that's not right there. Okay. Yeah, 92.75. So it would be down to 88.75, 88.50 is what you want to sell. That's right. And over here on the Russell, we have a high here of 66.8 now. So we're going to be selling 66.0. Okay. And that's 67. All right. Now I don't think we're going to end up with a trade on either one of them. After doing all that math, you see what's happening here? This green line is getting up into the black line right there on both of them. See the green area here? If the black gets in the green, there are no more shorts. That disqualifies all short trades. See, I just did it right there, and it's going to do it over here too. Well, that was frustrating. I really thought we were going to get something. Gold is going into a weekly trading zone, Owen. 63.64. Okay, so the gold's got a weekly trading zone right here. I don't have my gold zones on, but I believe you, and that is probably why it's hanging up right here. All right, so it's 120. We haven't had a single trade yet. Well, we did have this one trade that we missed. What a great trade to have if you got it. But no other trades have triggered, and we have about 10 minutes left in the room right now. Yeah, that's what we have right now. Okay. So nothing here. Nothing here, nothing here, nothing here. We don't have anything that we can trade right now. Let me go back over here and look in the live stream. Did anybody ask to see anything yet? No, nobody's asked to see anything over there. If you want to see anything else, you want to see equities, some stocks or anything like that, just type in the symbol that you want to see. Yeah, happy to show you. I can show you something anyway. Yeah, I'll do it on the ES. ES has no chance of giving us a trade. If we look at something like Apple. Okay, let me blow that up. And we're not going to look at that on a 7 range, but we can look at that. It's 170 bucks. We'll look at that on a 50 range. Okay, so what it was saying this morning is to buy Apple right here at 74.17. It ran up to 76. It ran up $2 from there. Then it said to sell it over here at 74.12, and it dropped $4 from there. It said to sell it again here recently at 71.75. And I would think right now this has got a bottom right here. They have like a triple bottom going on right here. If you get into that, I'd have my stop at break even or locking in some profit. That's Apple. And if you want to look at anything else, Google's similar in the stuff that it's done, but it's not done so much today. It's still back up. Came out of the overbought right here. Now I would have to adjust the I go in here to context and I turn on the no trade zone. We're going to be in complete no trade zone here. So to adjust for that, you have to go down here and make this smaller. This number smaller and see what that does. There you go. So there you have the arrows triggering on the Google. But for today, there was one right here saying a short and one right here currently saying a short again. This is coming after a lower swing, so this is probably a good opportunity right here. We're 21.48. Okay. Now I'll jump back in here. Look at these, see if anything's happened. Not yet. Yeah, the gold's still moving up, and the indices are moving up with the gold. That's kind of weird. It doesn't usually work like that. And you see how we got an arrow right here, but it's after a trend change. I don't like to do an arrow on shallow pullbacks on the trend change, and that's what this was. Very shallow pullback. I like it to pull back down and hit the ribbon. So pull all the way back down here to the ribbon. We put that all the way on. Okay, pull all the way back down to the ribbon. And I like to do the same thing over here on the gold. I guess I'm going to put the ribbon all the way back on all of these. I was thinking it remove things, but then it got hard to differentiate between the ribbon and the other things. So let me just put it all the way back on all of these. Okay, so I was going to say the ES because this is normally where the ES is. The ES just gave a short, but that's the Google just gave a short right here. If this pops up out of the oversold, it's going to give us a long trade here on the NQ. Okay, if it pops up out of the oversold. Thoughts on U.S. oil? Crude oil? Is that what you want to look at? D. I'm happy to switch over to crude for you. Hang on, something. I just lost something here. Hold it. Go back. U.S. oil. U.S. oil is a company or crude oil. Okay, crude. Let's just look at crude then. Gold just gave a trade in here. Hang on. I'm missing the trades. I'm missing the trades on the futures because I'm trying to branch out and show you other stuff. Okay. Hold it. I missed the trade on gold. I didn't get filled. Well, I tried to get filled too late, and you don't chase trades. Crude oil. Let's look at it right here. Okay, we'll just do GCL or GC or just CL. Okay, and on crude, we're on the N contract now with crude. Okay, just so you guys all know. And you don't want that on a 50 range. You want that. We'll go back to a 7 range with that. Right. So with the crude oil, we got to change the sensitivity to 0.01.
Did you guys look at the inventory numbers this morning when they came out?
I didn't. I talked right through it. That was during the training.
I'll check. I've got a browser right here with it loaded.
That was a big miss. It was a huge miss. It was minus 12.5. It was a draw of 12.5. They're expecting a build of 1.9. So a huge miss in the inventories.
That is a huge miss.
Yep. Okay, so this is what the crude oil looks like right now. And when the crude inventories came out 2 hours ago, right here is what happened when the crude inventories came out. Had this little gap right here, and price ran a little bit. But this is what it looks now with crude. It's really messy. The trading in here, the long-term direction is completely flat. You know, I replaced crude with the Russell last week because the DOM was all messed up in crude. You know, we trade crude regularly, but last week the DOM was all messed up, and it was because it was rolling over. It was in the middle of the rollover, so we bumped crude off and we added the Russell. And I've been having a lot more trades with the Russell than I was going to have with the crude, so I might just leave the Russell in for a little while. I know the crude that's just another. You know, we have 3 indices here, and that it's kind of vanilla. You know, just getting 3 indices, but it is interesting to see how the 3 indices either do or don't work together. But there's a long trade here on the NQ here, and that stop just bumped to break even automatically, break even plus a tick, as I described earlier. And that's got a 30 tick profit target on it. I'm just going to lock in 4 ticks on this, so we have something to go on today in this session. It's now 127, so this will be our only trade probably. We missed the gold trade. We missed the Russell trade earlier. We missed this Russell trade. And we have this NQ trade that's working right now. And 4 ticks is what it's going to end up being. Yeah, so this is what the crude looks like, D. Okay, it's a mess. And you know, if you wanted to look at inequity that's got to do with the oil, then you got to give me the symbol name for that. Okay. So we're getting a little bit higher swing over here on the gold. Pullback there might be worth trading, maybe. And we want to see the NQ get up, put up a higher swing right here. We want to see it get up above this level, put in a higher swing. That's what I'd like to see there on the NQ. Okay. And pulling back here now on the gold, it's almost back down to the ribbon, but it is in the oversold right here. It's 129. I don't know if we're gonna have time to follow through with the whole trade right now. If I didn't have another meeting coming up, I wouldn't care so much, but I do have another meeting coming up. Right, 64.2. Now 64.1. You'll be buying 64.9 right now. 64.9. Okay, on the gold. Now remember, we are approaching the FOMC meeting minutes at 2 p.m. You probably don't want to be trading when the minutes come out. It's going to take some time for them to be deciphered anyway, but still probably a good time to not be in the market because right now everything is really sensitive around the rates. And the minutes are going to have a lot of verbiage that goes around the building of the rates. Okay, so we did get the up close on the gold. And the gold should go enough to get our stop to break even. It should go at least to right there, probably through that. There is this big number down here for a pullback number, but we need 4 ticks in profit to bump the stop to break even. Okay, 4 ticks in profit to bump the stop to break even. The number 64.2 just dropped by a lot. So we'll let this trade play out, and then we'll wrap it up. Not really much to look at here on the, oops, not really much to look at there. Put this back on top, all right, and slide this back over here, and move this back in here, and then make sure you guys can want to see what you can see. Let me undo that, click on that, So we want to see a higher swing here on the NQ. We got, I think, 4 ticks profit on that one. And we didn't do this one, and we missed this one back here. And we're in the gold right now. Let's see what that's going to do. Hopefully it's not going to take too long because I've already run over by a minute. But if anybody who's watching, if you like what you see, we do this every business day from 9:30 to 11:30 in the morning. Right? If you want to come in and take the free trial, the only way you get access to these indicators is to take the free trial. Let's go do up one more tick here. It's just got a tick on that one for me, and then I'll bump the stop to break even. Come on. Oh, it almost got there. There it goes. Okay, so stop to break even on this. And I'm thinking it's going to go up to 66. So now 66 happens to be right here. 1 tick below the swing high. 66.2 is where the swing high is. I'm just going to lock in 1 tick on this. The rules, well, every trade has 3 parts to it, right? If you go here to the trade rules, go to mytradingiq.com, go to trade rules right here. Every trade has 3 parts: the entry, the risk management, and the exit. Now we did the entry exactly right for this trade, right? Then we did the risk management, which means moving the stop to break even. We did that exactly right for a 7 tick range bar. We had a 10 tick stop that showed the break even after 4 ticks in profit. Then you have the trade exit. That's what we're looking at now. Now the numbers that I just gave you, the first one was looking left to the prior swing high. That was the first one. That was actually the second one. The first one I gave you was this, looking for a potential number in the DOM. That was the 66.0. Looking left to the prior swing high, I think that was up at 66.1. You see, it just took us out with 1 tick. But the 3 parts to a trade are the entry, the risk management, and the exit. We have the rules for all of them right here. Right? Using our indicators, those are the rules for every trade. The rules are always the same. They don't change from trade to trade or market to market. Always the same. Okay. So I anticipate this is going to get up to this level. It just took me out a week, but I anticipate it's going to go up to there. The NQ is working its way up to the prior swing high, and it should go up through that. We just don't have anything else on these other markets right now. And that is it, guys. It is now 1:33, so I've gone 3 minutes over, but I was a couple minutes late starting it, so that's okay. If you have not taken a free trial with us and you want to, go here to mytradingiq.com. Right here, sign up for your free 5-day training. If you're going to sign up for the training, go to trading platforms and give us your TradingView ID. If you're in here on the TradingView live stream, well, then you have a TradingView ID. All you have to do is give it to us, and we will get you hooked up with your indicators right away. Right? We do all that ourselves. We don't have to send it out and have somebody else do it. We are able to do it ourselves. So as soon as you get that information to us, the sooner we'll get you set up. All right. If you want to take the trial and you sign up now, then you'll have it over the long weekend to be looking at over the whole weekend. And yeah, once you sign up for the trial, then we'll get you into all the other groups in the community that we have, and you'll be able to see lots of videos and things like that in those different areas we'll put you into.
Crypto and Forex trade over the weekend, and futures will open Sunday night at 6 p.m. Eastern. And
that is also true.
12 noon
what Dwayne
Eastern.
was just saying, for everybody that's in the live stream, you can't hear Dwayne. Dwayne was just saying that, even though futures are closed over the weekend, crypto's not going to be closed over the weekend. So you'll be able to trade that, you'll be able to watch that using our indicators over the weekend. All right, I'm going to wrap this up. If you want to take a free trial, go to mytradingiq.com, sign up for the free trial right there. The trial really is free. We don't even ask for a credit card. All right. Have a great weekend if I don't talk to everybody tomorrow or the next day. And I'm going to stop the live stream right now. Okay, the live stream is done. And we're heading back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Almost there, Dwayne.
All righty. Recap of the morning session.
Today it took 6 minutes and 2 trades to get to $500.
Great job.
Thank you.
Okay, guys, we will pick up where we left off. Now, for those of you that might not have been here at the very beginning, I shared with everyone the CTA alerts. I was a little later posting them last night. It's usually about 30 minutes after the Globex open, sometimes sooner, and as you can see, sometimes later. Last night they came out at 7:25 p.m. If you're not a member or a trial member, then you didn't get these numbers at 7:25. So if you want to grab a screenshot, you can do that. And we've already looked at the daily chart, and so now we're on the ES, and you see my long target and short target, and these are the lines in the sand, 4202, 4140. Okay, you can make your lines in the sand look any way you want. They just serve as great visual cues to help you stay on the right side of the track or street. Now, when we opened last night, we had resistance overhead at the BBC and support below at blue and climbing. So we had to be patient and wait for price to get below blue and climbing, which turned blue and climbing into red and falling. Okay, this is bullish, the bearish. So if we're below the green line, the BBC, that just stands for bull bear cross. When price crosses below it, like it did back here yesterday, then we're bearish and we anticipate lower prices until price gets back above the BBC, and then we anticipate higher prices. Stands for bull bear cross. Bullish above it, bearish below it. Now, price hit our lowest weekly trading zone for the week on a Wednesday, 4118/4119. We've published the zone since December 14th of 2009. Our members and trial members get them Monday morning at 6:15 a.m. Eastern, so they can get them on their charts before Wall Street wakes up for the week. On Monday, you want to put your new zones on, but you hang on to last week's zones at least through Monday, because the previous weekly zones often hold sway over the market until the new zones kick in, which is usually midday Monday, almost always by Tuesday. So we consolidated here at the lowest zone. Only 3 things happen at a zone. The most common is this, 70% of the time, consolidation. Second most common, 20% of the time, is rejection. And then 10% of the time, what we call the slice. So after consolidating at the zone, we're now bouncing. And the step line, the black step line, has just crossed now to the right side of red and falling. As soon as that cross happens, the black line crosses that red line, it tells us to expect or anticipate a pullback to the BBC. Now, the pullback to the BBC holds more often than not. So once price gets here, we then still have to be patient to see if this pullback's going to hold. Eventually a pullback won't hold. So, but until proven otherwise, we'll expect this to be resistance. And then as we start to print red candles, we'll be able to trade again back down to the zone. Now, if price rallies up above the BBC, then we'll start thinking long, and we will trade up to the zone overhead. And the appropriate alerts will be placed in the Logic 247 channel. Now, I showed you the CTAs, and as you can see, we hit the target. There was never any question if we were going to trade towards the long target because of how price opened last night. below the BVC, and it stayed below the BVC. So until price closes above the BVC, and then we have a candle open and close above the BVC, only then do we start thinking the long side. Now let me show you. I gave you the recap of the Logic 247 alerts, but it's been a while since I actually walked you through what they look like, and so somebody might be new, so we'll do this real quick. Last week was week 250 of Logic 247. We issued a total of 67 alerts. 19 never triggered, so we had 48 actionable alerts, of which 7 or 15% were stopped out based on that risk profile I explained earlier. The first alert coming out of the gate Sunday night, when you see these little Z's, that means it never triggered. On the Dow, we hit the target. And then we had a no trigger on the Russell and no trigger on the NQ. And then we hit the target on crude. Another no trigger on gold, silver. And then this is the 6E, the euro. And this is bonds. That all happened Sunday night. As we roll into Monday morning, we had a short on the Dow. We had a long on crude. We had a short on gold. Short on silver. Short on the euro. No trigger on this ES. Thumbs up means we hit the target. On the ES, on crude, on the Russell, on bonds. And then we roll into Tuesday, short on the ES, short on the NQ, long on crude, no trigger on the Dow, short on the ES, short on the Dow, short on the Russell, stop out on the NQ, long on crude, stop out on silver, and a short on the euro. And then these are alerts that have been put out today and this afternoon. Valerie will update the recap, okay, which will include the ones put out today. So let's go back to where we were. Just wanted you to see what those logic alerts look like. There's an entry price, there's an initial target on every alert designed to help you get your goal for the day. And then quite often there'll be a second target, a third target, and then there's always a final trade to target. If it's a short, the final trade to target is the weekly zone below. In fact, this morning, just as an example, one of the alerts I put out this morning was the ES, the sell 41.25 down to 41.23, down to the weekly trading zone at 41.18/19. That's a 6-point move at $50 a point. That's $300 per contract traded. You've earned the right to trade 5 contracts, it's $1,500. You've earned the right to trade 10 contracts, it's $3,000. When you become a member, you don't start trading real money right away because you haven't had a chance to learn the strategy yet. So the 24/20 blueprint is going to direct you to put together 10 consecutive days in a row in your demo account where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with 1 contract. Once you're trading real money, then your goal is to increase your account balance by $2,000. Once you accomplish that, then the blueprint will give you the green light to add a second contract. The big difference between the first and second contract is first contract is funded with your startup capital. Second contract is funded with profit you earned in the market. Blueprint will tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. It's called the 24/20 Blueprint because it's designed to help you go from 1 to 20 contracts over a period of 24 months. No get rich quick. That's not how you build a business. Step by step. First, you get a firm foundation, and you start to build those walls block by block. Okay? You only add one contract at a time, and you only add with profit you earned in the market. If you have the discipline to follow that formula, it makes it really difficult to blow up another account. If you choose to break the rules, then you can absolutely blow up an account. Now, I commented that once the step line crosses, we expect price to then pull back to the BBC. Now, that's not something I would put in the Logic 247 alert channel because that would be a counter trend trade. As long as price is below the BBC, the only alerts I'm going to put in the channel would be short alerts. Once price gets above the BBC, then I will only put out long alerts. Okay, so in the Logic 247 channel, there's over 14,100 individual handcrafted alerts. Every one is a trend trade as defined by the 30-minute chart, price, and the BBC. Why is that? Because a counter trend trade does not have the same high probability, low risk characteristics of a trend trade. So every alert in the Logic 247 channel over the last 251 weeks, every one of those has been a trend trade. Now, once you understand the methodology and the strategy, if you choose to trade counter trend, well, certainly you're welcome to. But I suggest you learn to trade with the trend first before you start dabbling with counter trend trades. Okay? And remember, you only need 2 points. You can take 2 points a day out of the S&P. That's $100 per contract. Once you've earned the right to trade 5 contracts, then those same 2 points are worth $500. Once you've earned the right to trade 10 contracts, those same 2 points are now worth $1,000 a day. And that actually puts you in the top 3% of wage earners worldwide. Some people will teach you that the solution to the market equation is more points. We don't agree with that. We believe in more contracts because there are days when it's difficult to take 10 or 20 points out of the S&P or any other market. But I've never seen a day since I started trading futures that there weren't multiple opportunities to take a 2-point move out of the market. So I see one as the simple way, one as the hard way. I never call it easy because trading's not easy, but it can be simple. And if you're looking at your chart right now and you've got 10 different indicators and 10 different oscillators, you're doing yourself more harm than good. Okay? Having all those indicators and other things on your screen arguing with each other, half of them telling you to go long and half of them telling you to go short. I don't know about you, but I have enough voices in my own head screaming at me that I don't need the stuff on my chart disagreeing with each other. This is about as minimalist a chart as you'll ever see, but it works quite well and has for many years because it's based on the underlying principle upon which markets operate. And that's never going to change. So we're not teaching you to trade a specific market. We're teaching you how to trade. Once you learn how to trade, you can trade anything. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Because price flows the same across all markets and all time frames. Why hasn't anyone else ever told you that? Well, because if they just came out and told you the truth, they couldn't sell you a million different solutions to a million different problems that really don't even exist. Because we only have one thing, the lifetime membership. We just tell you the truth up front. Okay? It's that simple. All right, so let's go to the Dow. And just like the ES, price opened and went sideways, pulled up to the BBC. The pullback holds more often than not. Price got below red and falling. So now we're ready to trade down to the target. This candle opened at 33,123 and took us all the way down to the zone, our target, through the target, pull back, hit the target again, and then by the time we had this pullback, the BBC was already below the short target. So as price traded below this little flash of blue right here, then the only trade in my playbook is a short trade. But once this step line crosses, and I know that price is going to attempt to pull back to the BBC, I'm going to sit on my hands until price either gets there or shows me that it can't get there. And so we don't know yet. Okay? Gotta wait. There's 7 minutes left in the life of this candle. In those 7 minutes, we could reach up and tag it, and then immediately start printing a red candle. You gotta be patient and wait for the high probability, low risk trade opportunity to present itself. If you're not willing to do that, then you're just gambling. And as you know, what you win in Vegas stays in Vegas. But again, the pullback holds more often than not. Price is always trying to get to a weekly zone. So we saw on the ES that we made it not only to the zone, but to the lowest weekly zone. The Dow came close, but we could get a pullback up to the BBC and start printing red candles. And if we take out this low, in fact, that's a nice window of opportunity in and of itself right there. Got to make sure price gets below that low, and then you trade it down to the zone. 32,795 to 32,765. That's 30 points. $5 a point, $150 per contract traded. On the Russell, here's where the market opened. Just like on the ES, just like on the Dow, there's that pullback to the BBC that holds. Price gets below the zone. Blue and climbing turns to red and falling. And in one fell swoop, boom, we hit the target. This candle opened at 1792.7 and dropped to 1784.9. Plenty of room to get your goal for the day. We hit the zone and find support. Support will always send the market looking for resistance, which we found at red and falling, which sent us back to the zone, consolidated for hours, and then we dropped. And on this drop, you want to look left. Make sure you get below this low, this low, this low, and then you've got clear skies all the way down to this low, which is right about where that candle ended. And then we started going sideways. Step line is crossed. So the potential now is for this green candle, or the next green candle, to take us up to the BBC, which we expect to be resistance until proven otherwise. Once we hit that BBC and start printing red candles, then we are ready to short it back down to the low of the session. Okay, in Q. Notice how all the indices are kind of the same. S&P, Dow, Russell, NQ. We opened in between resistance and support. Blue and climbing turned to red and falling. So there was a nice shorting opportunity down to the zone. That would have given you your goal for the day. And then price spiked the zone, pulled back, and down we go all the way to the target. And on the NQ, we've already completed the pullback to the BBC. And you see what happened when this was a big green candle all the way up to the BBC. But once it touched it, look what happened. Got 3 minutes left. When that next candle opens, if it starts printing red, you got a window of opportunity based upon where the candle opens down to here, because red and falling has now gotten directly below price. So as price starts to drop, that could turn into support. See up here, you had red and falling, and then it turned into blue and climbing, which became support. That could happen here. Okay. So we hit the target and then some. And this is the lowest weekly zone right here for the NQ. So that covers the 4 major indices on crude oil. Markets opened, pulled back to the BBC, the pullback held. Remember, when price is sideways like this, and you got red and falling, you don't want to go long. You want to wait for red and falling to turn to blue and climbing. Okay. So even if you didn't enter until this candle here, it opened at 74.11 and up to 74.31 would have been $200. So this was a $240 per contract move in this candle right here up to the target. But it actually hit the zone where it found resistance. Pull back to the BBC, support. When the market finds resistance, it's going to go look for support. When it finds support, it's going to go look for resistance. Back to support, back to resistance. And then eventually we know that price will trade through the BBC. And it did, all the way down to the zone. This was a big angry red candle, all the way to the zone. But by the time the 30-minute candle closed, the only thing left touching the zone was the wick. Remember I said 20% of the time there'll be rejection? That's a beautiful example right there of rejection. So what's price doing now? From support, it's looking for resistance. And because we have red and falling in the BBC together right there, that's potential resistance times 2. And if in fact that does become resistance, then we'll have an opportunity to trade short back down to the zone, or at least to this low right here, which would look something like this. Being conservative, 73.60 down to 73.50. There's your $100 per contract. Goal for the day. Whether you're trading 1 contract or 100 contracts. That doesn't change this. Okay. So we've got a new candle. Question is will it continue up or will it start to drop? Well, if it gets below the step line, that's when this window of opportunity will come into play and give you an opportunity to get your goal for the day. We hit the long target multiple times. All right. Gold, two-sided action. Here's where we opened. We pull back to the BBC. We got above red and falling. Okay. So this one candle right here opened at 78.4 and ran up to 80.4. That one candle right there is $200 per contract traded. And we pulled back to the zone and found support. Got back above the BBC. Red and falling turned to blue and climbing. We ran right to the target. Then we got below the BBC. Blue and climbing turned to red and falling. And we dropped right to the short target. Two-sided action. And now we're just consolidating at the zone, which is what we anticipate. Silver opened, went sideways. Now you only need a 2-penny move in silver to get your goal for the day. This one candle here opened at 23.55 and dropped to 23.49. That's 6 pennies or $300 per contract traded in that one red candle. And then over here, we hit the target, consolidated at the zone for a couple of hours. Now we've traded lower, bounced, and this zone here, 22.60. This is the lowest weekly zone for silver. And the euro. More two-sided action. Market opened here. Get above the BBC. Get a leg. Go for the day. Pull back holds. We hit the target to the tick. When we get below the BBC, we hit the short target. When we get back above the BBC and hit the long target again. Notice where we found resistance right at the zone. Okay. It sent us back down to the short target again. So we hit the long target twice and the short target twice. And where would we expect price to go from here? Well, if price can take out this swing low right here, you've got a window of opportunity down here. Trading's not easy, but it can be simple. So we're off the low of the day. But again, before you started trading today, looking at the daily chart, lets you know what the institutional traders are doing or not doing. Okay? Some might say, boy, the sellers are really pounding this. No, maybe, maybe not. Well, it's a huge red candle. It takes financial commitment for price to rise. All it takes for price to fall is for institutional traders to hit the pause button. And price will just naturally deteriorate on its own. However, with the institutions some institutions only trade long. Some institutions only trade short. Some do both. But when institutional traders realize that buying institutions have hit the pause button. They do come out of the woodwork. We still haven't figured out how they get in the woodwork, but they come out of the woodwork and they do exert selling pressure. Okay. Now, we talked about this for several days, that this area right across here was potential support. And it has been. That's why we're off the low of the day. Because we hit the support level that was put in place May 10th. So in order to get to the 24% fib retracement, we got to break the low of May 10th and now the low of today. If you're looking for everything a trader needs, all under one roof, at one low price, come to the right place. EminiFuturesTrading.com is where you get your lifetime passport. There's no fine print, okay? Lifetime means lifetime. There's no recurring fees. Not weekly, not monthly, not annually, ever. There's no upsells. No nonsense. We refuse to insult your intelligence. There's way too much of that going on out. That's a very competitive field. So we do things a little different. Very transparent in all that we do. We trade live in front of you every day. All of the alerts are issued well in advance of them triggering, so that you can use them, especially the logic alerts, for the purpose they're intended, as a training aid. You get the alert, you go study your 30-minute chart, you actually see with your own eyes the window of opportunity that the alert represents. And then you're prepared when price finally gets to the entry price to use your smaller time frame to actually execute and trade the alert. The more times you repeat that process, pretty soon you'll be able to look at a 30-minute chart and see the window of opportunity yourself. In fact, I was in a mentoring session the other day with someone who told me exactly that. He says, hey, I'm starting to see the windows of opportunity before you even put them out. And that's exactly what we want for you. We want you to be a part of our community forever, but we want you to become self-sufficient. You want to become self-sufficient. You don't want to depend on somebody to tell you when to get in and when to get out for the rest of your life. It's very difficult to build a trading business on somebody else's information. You need to get to the point where you can look at a chart, see the opportunity, and know how to trade that opportunity. 9 out of 10 new traders fail because they don't have someone to teach them how to do the job. Imagine trying to become a plumber, electrician, a brain surgeon, an airline pilot, or an attorney, anything, without having someone to show you how to do the job. Lunacy, right? Yeah. But in the world of trading, people do it every day. Why is that? Because of the low barrier to entry. You can fund an account with a couple grand. Spend another 20 bucks, you can even get some business cards with your name and trader on them. But they don't know they need a business plan. They don't know they need a trading plan. They don't have a definable edge. So 2 hours a day, every trading day in our live training room, from 9:30 a.m. to 11:30 a.m. Eastern, that's what we focus on. Teaching you how to spot the opportunity and execute the trade properly. And we teach you aggressive risk management. Now, once you learn the strategy and you become consistently profitable, okay, you may want to use more risk. Okay? However you've written your business plan, however you've written your trading plan. In fact, part of your business plan should be that every 90 days or 6 months or whatever, I'm going to review my trading plan to see if any changes need to be made. And you should keep a trade journal of every trade you take, so that when you evaluate your trading plan, you're not just guessing at, what worked, what didn't work, what was good, what was bad. You've got the data right there in front of you in your trading journal. It's really important, especially for new traders. Okay? When you get stopped out and you don't understand why, that hurts. When you get stopped out and you understand exactly why, it doesn't hurt so much. It doesn't make you feel good because you didn't make any money, but you got to understand that getting stopped out is as much a part of trading as breathing is a part of life. And a lot of traders can never grasp that, would-be traders. They continue to Google till their fingers bleed, looking for that holy grail, that one magical indicator or oscillator that will prevent them from ever being stopped out again. The only way to never get stopped out is to A, never place a trade, or B, never use a stop loss. And never using a stop loss means you will quickly blow up your account. So, along with 2 hours of live training every day, you get unlimited one-on-one private mentoring. The strategy we teach, the indicators you own for life, are fluid across all markets, all time frames. Futures, stocks, crypto, forex, ETFs. As a passport holder, you'll receive the Logic 247 alerts around the clock, Concierge Trade Alert report every night when it's published. You'll have access to the Thursday night members only workshop, all that and much more. Plus around the clock support via Telegram. So, if you're ready, go here, get your passport. You'll have plenty of time to play around with everything over this long weekend coming up. Now, we'll still be here tomorrow. We'll be here Friday. But Monday is a holiday. We won't be here. We'll be back Tuesday. So, however, I will be monitoring Telegram over the long weekend. So if you have questions over the weekend, either myself or someone else will be available to answer them for you. Let's wrap this up with our good word for the day. Last 3 days we talked about when God sends you an angel. I guess that's a trend because we're going to continue today. Daniel 6:22. My God sent his angel and shut the lion's mouth. If you've been a believer for any length of time or read the Bible, then you know the story of Daniel and the lion's den. Here are some more situations when God might send an angel to help you. Number 1, when doing the right thing gets you into trouble. Doing God's will put Daniel in the lion's den. But God brought him out and publicly vindicated him. The king declared in Daniel 6:26, I issue a decree that in all my royal dominion, people must tremble in fear before the God of Daniel. Number 2, When you're tired of battling temptation, when the urge to pick up a drink or a drug or a cigarette or a Twinkie feels overwhelming, or you think the only way out is to lie, or loneliness is driving you into the arms of the wrong person. After Jesus had battled temptation for 40 days, the Bible says in Matthew 4:11, "Then the devil leaveth him, and behold, angels came and ministered unto him." When the load you have feels too heavy, when you're facing the indescribable agony of being crucified on a cross, Jesus endured that. And he prayed the defining prayer of his life. "Father, if it is your will, take this cup away from me. Nevertheless, not my will, but yours be done." Then an angel appeared to him from heaven, strengthening him. That's Luke 22, verses 42 and 43. God will strengthen you through his word and prayer. Sometimes he will send people you know to help you do it. Paul wrote in 2 Corinthians 7, "We were harassed at every turn, conflicts on the outside, fears within, but God who comforts the downcast comforted us by the coming of Titus." Other times, he will send an angel. The bottom line, when you call on God for help, you can be sure that help is on the way. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.